Hello and welcome to Propy's weekly webinar. Today is episode 123. Our topic today is transforming the real estate deal-making ownership and process management for cryptocurrency and real estate. I'm Gwyneth Iredale. I'm your host today. I'm VP of Customer Success at Propy, and we are so excited and pleased to have with us Steve Streetman. He is a data scientist, commercial real estate, and cryptocurrency investor. Welcome, Steve. It's great to have you.
It's great to be here. I really appreciate the opportunity.
Yeah, a little background on you. Gosh, wow, you're a data scientist, systems engineer, you're a CRE investor and exchanger, and an avid cryptocurrency investor. So you have a fantastic background to have written a book that's called Cryptocurrency and Real Estate: How to Profit as Bitcoin and Blockchain Revolutionize Real Estate Investing. So we're so pleased to have your expertise, and we are right with you as Propy, helping to advance the mission here on revolutionizing real estate. So thank you.
I've been following Propy for years. I've really been enjoying all the things that you guys have done, all the innovations that you've put out there.
Excellent. Well, thank you so much. We do have a loyal following. A lot of people want to help solve the problem of how to make real estate transactions easier, more accessible, safer, and more secure and transparent. Yep. I also see that you're a regular on the Real Estate Guys radio events.
Yeah, I've been a speaker for them for about a year now, and I was faculty at their latest summit in Belize. They're absolutely fabulous in the real estate world. I mean, it's a podcast to live up to in terms of trying to be with them. Both Robert and Russ are just very, very awesome people, and they're really, really interested in anything that impacts real estate.
Nice. Well, I can't think of a nicer place to have a little bit of a summit than Belize.
It was great, except for the mosquitoes.
Oh, goodness. Well, maybe the margaritas would chase them away. So we've invited you here today to share some of your knowledge and speak on the subject. We have with Propy 3 different ways to transact real estate: traditional, crypto, and then we've developed this process of NFTs. So your background is a perfect fit for helping share some of your knowledge, because some of the questions that come up, you'll be able to answer with ease. So did I miss anything on your background that you want to tell us about before we start chit-chatting about some of the questions?
No, I think you were pretty thorough there.
Okay, excellent. Yeah, so I was reading the synopsis of your book, and you use the word Internet of Transactions. And I've often heard blockchain as described as the Internet of transactions. Is that your term, or how did you come up with that? And what do you mean by that?
I may have heard it. I guess more recently I've been seeing Internet of Value a lot out there, but I actually prefer Internet of Transactions. Because what Bitcoin really did, the main thing it did, it wasn't so much that it was digital money. There was digital money before Bitcoin. All the founders were in jail or indicted or anything. But what Bitcoin did was it found a way to do trustless transactions between people across the world without a counterparty, without somebody in the middle. And no one had really ever done that before. And so what this opens up is all kinds of ways to do transactions. And of course, there are lots of transactions that occur in real estate. You know, we've got contracts, we've got closings, we've got buying and selling, we have the way we own it, we have the way we manage it. There's all kinds. You pay rent, you pay mortgages. There's just all kinds of things that are transactions that have a chance to be changed by being put on a blockchain and getting rid of some of the intermediaries who are just stuck in the middle, sucking profits and money and everything off of everyone else. So I think that's really the reason for cryptocurrency. It's not a bunch of coins that are going to go to the moon. The real thing is that you're able to structure new kinds of transactions that are more beneficial to people. And that's what Propy has done in many ways, right? You've made cryptocurrency available in purchases, which very few people have done. Usually you'd have to sell cryptocurrency, and then you just pay the cash for the real estate, which in my opinion is kind of cheating. You actually want to give the cryptocurrency to the seller if you can. But you're also working on on doing ownership for cryptocurrency. And that's how I laid out my book, actually. It was transforming deal making, transforming ownership, and then transforming management for real estate companies.
Excellent. Well, thank you. Those are good points to make. Now, you mentioned deal structuring. What are some of the common ways people can use crypto in those situations of traditional and maybe a mix? You mentioned that taking it wallet to wallet is one way, because some people would rather receive crypto for payment. But what are some of the other types of deal structures you've seen?
Well, obviously, the simplest thing is just to give cryptocurrency to the seller of the real estate, and the seller gives title to the property to you, right? That's very simple, clean transaction. You really can do that with any cryptocurrency, though obviously the more popular ones that are more liquid are going to be more attractive to sellers. Where it gets more interesting, what if you use cryptocurrency as the down payment? So maybe you can either get a traditional loan or a seller loan, and then you use the cryptocurrency for your part, your cash down there. That's one thing. I've worked through transactions like both of those. I have used cryptocurrency for the deposit on a large commercial contract, a couple of them actually. And what that really does is it buys you time. Cryptocurrency allows you to have time to be into the project and have the property tied up until you can actually decide whether you want to purchase it or not. So there's some ways to do that. One can get a loan secured by cryptocurrency without selling the crypto. And now you can use that cash in sort of an arbitrage to purchase real estate with that, which gives you diversification. Now you're in both real estate and cryptocurrency. And instead of the cryptocurrency kind of sitting out there, you're doing something with it. And that's been one of the knocks on cryptocurrency. It's all about appreciation. It's all about the price going up for most of them and for most people. Now, in the past year, couple of years, there have been more ways to use cryptocurrency. There's ways to get interest. There's ways to get staking. All those things are out there. But as we've seen recently with the bankruptcy of Celsius, some of those interest paying approaches were not really viable in a crypto downturn. But anyway, you may also be able to cross collateralize. So rather than just having a loan secured by cryptocurrency, perhaps you can over collateralize your real estate. You can add your real estate as collateral, add cryptocurrency as a collateral, maybe be able to borrow the whole amount for the purchase of the property instead of having to put a down payment down or having to work something else out. So there's a number of different things that you can do there to structure deals. And there's a really important thing about how you accept this. And this came naturally to me because I've done a lot of work in the real estate exchange world where they trade properties. You know, the original people have probably heard of the 1031 tax deferred exchange where you can exchange. Well, the original one of those wasn't this 45 days and 60 days, 90 days to close or 180 days to close.
On your last.
It was really trading property for property. So I work with a group of guys that sit around and they'll say, I'll give you my free and clear house and a $300,000 note for your fourplex. And so they're actually trading property for property. And you get this idea of being able to trade an asset for an asset as opposed to cash for everything. And everything's priced in cash. Well, cryptocurrency, as much as people might want to think of it like cash, cryptocurrency is an asset. It is a thing that you own. It is a piece of property. And that's what the US government says it is. It's what pretty much every other government says that it is. So you might as well embrace that. And there are some advantages to being able to buy real estate with an asset as opposed to with dollars.
Interesting.
Let's say I've got $1 million apartment complex and I want to sell it to you. Well, is it $1 million? I mean, you might pay me 1.2 million for it because you really, really want it. Or you might only pay me 600,000 for it because it has some deferred maintenance. So there's some other issues going on with it. The price isn't like as if there's this price that's fixed in stone.
Fixed value, like a currency.
Yes.
Well,
real estate has value that really is in a range, and it will have different values to different buyers. I just put my house on the market, and I had offers from $215,000 to $310,000. So obviously there's no real value for the property. There's a range of values to different people. But now cryptocurrency is exactly the same way.
Yep.
While you can find a price online at any particular time, wait 5 minutes, what that price is going to be. I keep getting announcements that Bitcoin has gone up 6% in the last 12 hours or dropped 4%
Yes,
in the last 8. So what is the real value of Bitcoin? Or any other cryptocurrency? And some of the other cryptocurrencies that aren't liquid, that value could be extremely changeable depending on where you are.
Yeah. So you're talking about some of the benefits when I'm hearing liquidity, and a little bit of a difficulty of putting the actual value on yeah.
Well, and I'm being a little bit long-winded here, but suppose you want to sell that apartment complex and you really want $1 million for it. And suppose the person with a cryptocurrency says, well, yeah, I think $1 million worth of cryptocurrency at that current price makes sense to me. I will do that. Is that really $1 million transaction? Is it an $800,000 transaction, a $600,000 transaction, a $1.2 million transaction? Because you're trading asset for asset, it's an agreement between you and the seller. So you could mutually agree it's a $600,000 transaction because there's volatility in the cryptocurrency and there's changeability in the apartment complex price. So if both of you owe capital gains taxes,
oh, there's where we're going with this. I was wondering. It's the
both
tax
of you
piece.
owe capital gains. This is a way. I mean, you must have a reasonable value, right? Yes, you're not going to go in and do something that's just completely screwy, but there is a range of values that can help manage tax consequences if you do asset for asset. So a seller might prefer to have cryptocurrency than dollars. Because if you sell that apartment complex for $1 million, the IRS knows exactly what price you put on it. Mm-hmm. So there are some things that can be done to structure crypto transactions. And I will tell you that I have had an accountant tell me that until you go to cash, that there is no taxable event because nobody knows what the value is. But that's not what my accountant says. And I'm not an accountant. I'm not a lawyer. I do not give or accounting advice or financial advice or anything like that. Just put that out there right now.
Yeah.
But there are some things that you can do when you're trading assets for assets that make things just more advantageous for everyone.
Excellent. Well, thank you. Gosh, that is a gem. That's worth the price of this webinar. That's amazing. So when a real estate agent is kind of probing for a buyer or a seller, of course, it depends on if they own crypto, when do they buy it? How liquid do they want to make it or not, borrow against it? What kind of questions should a real estate agent ask to pull out that information from the buyer or a seller? And can you give us both like a 1 or 2 sentences for each of those 2 situations?
Well, and real estate agents do need to be thinking about this, right? There are many, many more transactions that are being done or proposed with cryptocurrency, and every real estate agent in this country and probably the world needs to know what to do if they have a buyer that comes and offers cryptocurrency for a property, or if they have a seller who says, I'll take cryptocurrency if you can find me a buyer with crypto. They just need to know what they're going to do. There's a whole bunch of different considerations there, including, will the agent take their commission in cryptocurrency? Because if there's not so much cash in the deal, that may be a better way for the agent to make sure the transaction can occur. But you ask questions for what should you ask the buyer and the seller? Some big questions. Do you plan to liquidate the cryptocurrency, or is this going to be going directly to the buyer or seller? You don't have to liquidate it, but that's the majority of the transactions. And there are even companies out there now that provide that as a service. They will liquidate the cryptocurrency at closing for you and work with the title company as a service. So that's good news because most title companies won't touch it. Fortunately, Propy has started a title company.
Yes.
And so Propy will touch and do crypto transactions. And so I was very pleased that's how I got on this webinar, really. I was having a conversation to find out more about your title company.
Excellent. Because
I'm excited to have the ability to get title insurance. When I did my first transaction of real estate for cryptocurrency, we could not find anyone who would provide title insurance at the transaction. So what we did, the day after the transaction, we went and bought title insurance.
Oh,
Go
yeah.
figure. I
Yeah,
mean, why it makes
sort
a difference, I don't know.
Yeah,
but it
interesting.
does.
Yeah.
The other things that you might, which cryptocurrency, because there's around 20,000 of them now. So the seller might be willing to take Bitcoin, but not anything else. Or the seller might be willing to take the most liquid cryptos, or the seller might be wanting an NFT, like a Bored Ape Yacht Club NFT or something like that. I mean, different sellers will have different things. They have different objectives. That's the beauty of real estate. But so you want to know which kind, whether you're going to liquidate it or not, and then you definitely have to find a way to do the transaction, because it's still challenging to find a closing attorney or a title company that will do anything with cryptocurrency. When I did my first closing, I had to work out a whole closing process such that the title guys never had to touch the crypto. We worked it out between me and the seller and them, and everything was fine. Everybody was protected throughout the whole closing process, but I had to work it out myself because there wasn't anybody else to help out.
Huh. That's how we learn. And, Propy saw that there was a need for title companies that would deal in crypto. So we created our own. So we filled a need. Yep. And we're all doing that, right? We are all figuring things out as we go, right? Yeah.
Yeah, we're bolting the wings on the airplane as we're going down the line.
Yeah, paving the road as we're driving on it. Yeah. Yes, that's true. And for Propy, we just listen carefully to our clients, what the market's doing, people like you. Speaking of, we got a question from one of our attendees, and if I could pose that question to you, if you feel like you've ready for the next question.
Sure.
Yeah.
And I can see those in there. So I'll just.
Yeah. Number one,
first question is, have we ever dealt with traditional banks with a seller who wants to sell his or her home, but still owes the bank and the loan mortgage? Yeah. Well, yes. In fact, I'm currently in discussions. I've been under contract, and we're kind of doing some revisions where I would be putting 25% down in an altcoin for a very large assisted living portfolio. I won't go into many of the details of that, but it's a very challenging piece. But they have existing mortgages, and those existing mortgages don't care about the cryptocurrency as long as they get paid off in cash. So clearly, the seller can only accept crypto up to the point where he can pay off his mortgages. The bigger issue isn't so much with the existing mortgages. You're going to have to pay those off in cash. The bigger issue is trying to get a new mortgage. I've had lenders try to tell me that, well, the cryptocurrency is not real, so we can't accept that as a down payment. And I say, well, you're not accepting it as a down payment. The seller's accepting it as a down payment.
Oh, good point. Yeah.
You shouldn't really care. And they say, well, but you could just be putting that in there, and then the property's not worth the value. And I said, well, but you're doing an appraisal. Yes. So if the appraisal shows the value and you're doing loan to value, what do you care whether I give the seller dollars or cryptocurrencies or the lent out of my pocket? I mean, it doesn't really matter. It shouldn't matter, but it does. So it's going to be more challenging to get a bank lender to work through that. There's plenty of private lenders or more interesting lenders out there that you can work with, though. Yep. And the bigger deal with this is seller financing, because I've structured several deals where the crypto was a down payment, and then there was a seller note for the remainder, and then that only works if the property's free and clear, but that can work for you.
And just for from the point of view of Propy, we have created NFTs where at this time the home does need to be free and clear. In the case of payoffs, there are companies that will loan against crypto that we know of, as you just mentioned. So we know of Milo, Helio Lending, and Abra, and you got to check with them to see. I think Abra has really good rates. Do they work in your state? So there are ways to finance. They're not called mortgages, so it's borrowing against. And then the other part of the question that Kathleen asked here is the fluctuating prices, and for what we hear.
So that's actually a really good point to bring up, because
exactly.
There's really two ways to do this. and I've done it, I've put in contracts both ways. First is to say, I'm going to give you $250,000 worth of this cryptocurrency, and we will set the price either contract execution, or I usually set it 5 p.m. on the day prior to closing. So that way the price fluctuation is borne by the buyer until the day of closing. Okay, right. So that works. Now, the other thing that you can do, though, and I think this may actually be a better way of structuring deals with cryptocurrency, is to offer a specific amount of cryptocurrency. Because as we spoke before, the value, it's an asset for asset exchange. And so let's say that I'm going to give you 10,000 of token X. I'm going to give you 10,000 token X for the down payment, and then the rest will be out $4 million. Okay, so now we haven't put a dollar value on the cryptocurrency, and you have to make sure that there's probably some acceptable range that can close in, that you're still okay. But we also have not actually put a value on the crypto side of the transaction. And so we can later mutually agree what that value is at closing. So that gives us some flexibility in how we actually capture the contract. So you can either sell a crypto as a number of crypto units or a number of dollar units. And then you can make that go either way.
Yeah. You brought up something, or reminded me to ask you about something. You mentioned a coin labeled XYZ. Aren't there cases where you have to be a little careful? How do sellers protect themselves from somebody who's offering to send them some unknown coin? So just generally, how do you protect yourself from fraud?
Well, so an unknown coin isn't necessarily a fraud, right? Every coin was unknown at some point, including Bitcoin. So I don't automatically dismiss altcoins as valueless, but you have to very carefully weigh. It's not just value. You can go online and you can see a price associated with the coin. You also have to look at liquidity, because if you cannot realize that value, then that can be a very big challenge. So you need to do your due diligence on whatever crypto token that you want to do there. And if you're a real estate agent, you might want to do that on behalf of the seller and be able to explain, hey, look, this token looks like this is what the price of it has done over the past however long I can find out the information. And here is how big the market is, the number of trades per day. You can get all those metrics so that you can do your own due diligence. You can pull down the white paper, right? So investing in a new cryptocurrency is like investing in a penny stock, right? It's really venture capital more than something else. But if Bitcoin's a blue chip, then some of these others are, who knows what, and they could go to the moon.
So I'm hearing be skeptical. Be skeptical or do your diligence.
Yeah.
Yep, due diligence. But you've mentioned a couple of terms. I want to make sure everybody understands the difference. You are saying token and we're saying coin, interchangeable, not interchangeably, but in the same context. Can you describe a little bit on the difference between a security token, a coin? I can mention something on utility tokens. And what is the difference?
Usual difference between coin and token is that coin has its own blockchain, and token is put onto another coin's blockchain. So that's the technical difference between coin and token. But there's several kinds of tokens, right? There are utility tokens, there are more like currency tokens, there's stable coins, there are security token offerings, and there are smart contracts and NFTs. So there's several different kinds there. And I don't think we have time to go into all those kinds. So I really hope we get a chance to talk about ownership a little bit as well.
Yeah, that, and just to what Propy is doing, where we have a utility token that sits on the in the Ethereum blockchain, and it's not a security token. So there's a difference there. Security tokens are more related to financial regulations and such. Is that right? Anything with security?
Yes, absolutely. So security tokens.
Sure.
Well, actually, let me segue into that just a little bit, because
go for it.
Anything that is an investment of money in a common enterprise with an expectation of profit due to a third party that considers to be a security. So many cryptocurrencies out there are probably securities, even if they don't say they are, and even if they're not following the securities regulations. Look at Ripple, right? It's under lawsuit by the SEC. I'm not going to put an opinion on that because my opinion's not really worth anything since I'm not a securities attorney. But this comes down into when you look at real estate ownership as well, because there's more than one way to do this. Propy has done a really interesting way of creating an NFT so that one person owns a property by buying the NFT. And the details I think are actually really intriguing, but I can leave that for you guys to talk about in your own webinars. The other way to do own real estate is to own fractional real estate, and that's with a security token offering. So I'm working with a company called honeybricks.com. And Honeybricks is setting it up to be able to tokenize for others. So for those of you who've been in real estate for a while, you know that there are things called syndications or private placement offerings or Regulation D offerings. There's a whole different ways. And they are legal ways of pooling investor funds to buy bigger properties. So when you buy an apartment complex, say a $10 million apartment complex, you might have 20 or 30 investors plus the people who are actually putting the deal together, all as owners of the property. And as soon as you have that fractional ownership, you're going to pass all those parts of what they call the Howey test, and it will be a security. But it's actually not that hard to follow the securities laws. And with tokenomics, you can actually put into the smart contracts underlie the tokens the ability to automatically enforce the Securities and Exchange Commission rules and regulations. So there's some really cool things about this, because if you have fractional ownership right now in a syndication, an investor usually has to lock up their funds for 3, 5, 7, 10 years, right? Their capital is sitting out there until the syndicator gives it back to them. But with security token offerings, you have your ownership represented as a bunch of cryptocurrency. And the SEC says that after a holding period of a year, usually depending on the circumstances, you can sell your tokens. So now what Honeybricks is trying to do, and some other companies as well, is to build that secondary market so that real estate investors can come in and buy small pieces of really high quality real estate while complying with all of the securities laws. So I'm really excited to be part of that. And it's a cool way of owning it. So what Propy is doing is really cool as well. I mean, being able to move the property around by selling an NFT is so much faster and so much easier to do than it is with traditional real estate. But similarly with the security tokens, you can own small pieces of property or you can own bigger pieces, and you can now diversify your assets on a single platform. And buying real estate looks a lot more like buying stocks. Now, you might have 7 different sectors and stocks, and you diversify your assets between them. Well, you might buy some multifamily and some self-storage and some hotel and some warehouse, and diversify your assets along that way. So I think that's a big future for real estate. As I say in my book, the 3 sections are transforming deal making, transforming ownership, and then transforming management. And so I really think especially the transforming ownership is going to be very, very interesting for real estate going into the future.
Yep. Well, thank you for that. That would be our goal, as well as how to make real estate more accessible as part of our mission. So I'm glad you have some advice for that mission in your book. Speaking of advice, we have a question from our attendees. Any advice for a young professional just getting started in the industry? They've been working with a real estate acquisitions team, and they trade and invest in crypto with their own money, but love to bring the two worlds together full time. Any advice?
Well, actually, they're in a great place to start, because the fact that they already know something about cryptocurrency puts them ahead of maybe 90% of the real estate agents out there. If you are versant in that, you can construct deals that none of your colleagues can construct. whenever you have a market, and right now the market is so hot, right? You put a piece of real estate on the market and it sells right away, but that's ephemeral. It will not last. We're going to come into a real estate winter, forget crypto winter. We're going to come into a real estate winter at some point when the capacity to buy goes away, or when their interest rates go up enough that it really discourages people. There's all kinds of possibilities that could happen there. But when you get into that sort of thing, if you can construct ways for sellers to move their equity out of the real estate into something else, and think of it that way, don't think of it as selling the real estate necessarily. They're moving their equity, they're activating their equity, they're moving their equity from one place to another. If you think of it that way, you will be far ahead of the game and you will make deals no one else can make. And when you get the reputation for making deals no one else can make, you will get a lot of people coming to you. Of course, you may get a lot of the hard problems and not the easy ones. So maybe I shouldn't wish that on you. But it's a lot more fun, though, being able to structure interesting deals.
Speaking of fun, there are probably questions that you get asked most often. What's your favorite question to answer about all this?
Favorite question to answer? Well, the question I get asked the most often is, which cryptocurrency should I buy?
It's like a stockbroker.
Yeah, and my answer is, what's your favorite website?
Yeah.
I mean, it depends on what you're doing, right?
Yeah.
If I want to go buy something, I might go to Amazon. If I want to search for something, I might go to Google. And if I'm looking at a particular company, I'll go to that company's website. If I want to go entertainment, maybe I go to Netflix, or I go to some other streaming site. I go to a site that does what I need it to do. I don't think of cryptocurrency as a speculative investment. What one should I buy because it's going to go to the moon? I think of cryptocurrency as the internet of transactions, as we talked about earlier. And so I look for coins that have a unique value proposition in replacing some kind of transaction out there with something new and better. And that, I think, has stability and long-term momentum. So, and there's not one of those, right? What kind of transaction do you want to do? Do you want to buy goods and services? Do you want to buy real estate? You might should go to Propy and buy Propy coin to do that. If you want to list real estate, certainly you might want to have that there as well. Do you want to have music streaming fees? Maybe you buy a digital music NFT. You buy things that are so I sort of enjoy answering the question, even though I absolutely hate that question.
Yes, and I love your answer about what's your favorite website. That's a great analogy, bringing it back to what you stated originally.
Well, it is the same, right? Back in the late 90s, early 2000s, you had the .com boom. Yes. Anything that put .com in its name was investable. And there were a lot of really bad ideas out there. There's a lot of scams out there. And then you ended up with some really good ideas. And the best implementations of those good ideas bought up all the poor implementations of those good ideas. And you end up with tech giants like Google and Yahoo and Apple and Facebook. Cryptocurrency is doing the same thing. It is blowing up. It's really easy to create a new transaction, just as it was easy to create a website. And you can create a new cryptocurrency. You can do whatever you want with it. And there's a whole bunch of bad ideas out there. Digital art, but there's a lot of really good ideas. And at some point, just like with the .com boom, the good ideas will shake out and the bad ideas will fall off to the wayside. And then the best implementations of the good ideas will kind of take over, and you're going to end up with some absolutely huge companies that will be the juggernauts of the next decade or two.
So, wow, you have shared some amazing information, some really good tips. Is there any one thing you'd like to leave our audience with, since we've gone a little bit over our time?
Cryptocurrency and real estate belong together. They help each other out. They're synergistic. They support each other. And real estate is really stodgy. There's a lot of opportunity to really make a difference there. Learn about both sides. and keep going. And of course, you can start that by reading my book.
Yeah. Yeah. So I have put, speaking of reading your book, I have put a link in the attendees chat to your website. And I think I'll just repeat the name of your website, cryptorebook.com. That's crypto, RE for real estate, cryptorebook.com. And there's a link there. And I imagine it's also for those who want to use Amazon. I'm sure it's findable on Amazon as well.
Absolutely available on Amazon as well.
Yeah. Excellent. Well, we have gone over our time. We've answered pretty much almost all the questions in the chat here, and there may be more questions. We'll get back to people on live stream. I'm going to end this part of the live stream and say thank you so much, Steve, for being a guest on our webinar. We so appreciate it.
Well, thank you for having me. I really enjoy talking with you, and I'm looking forward to working more with Propy.
Yes, well, thank you for recognizing that Propy is leading the way for solving the problem of putting crypto and real estate together like that, and working with traditional real estate as well. So join us next week for the next episode 124, same place, same time, both live stream and audience attendees. If you'd like to ask questions then in real time, please join us on the webinar. So I'm going to hit the end